Welcome back, everybody. Sive is here with the Forex Peace Army.com. Let's take a look at the euro currency and make the decisions on what we're going to do in the next step. So yesterday breakout that we discussed, pointing on some bullish factors on yesterday performance and day before, so actually has brought some fruits, and you can see the breakout has happened. So actually yesterday we just said that although we see the bullish context and probably we will get this action because technical picture suggested that it should happen, we still called for to be careful just because of the Fed statement, and actually it could bring some really tricky moments, although for the truth's sake yesterday it was relatively smooth, so you can see that performance was accurate without any big spikes, and actually so not often you could see this performance when the Fed has the meeting. So what's next? As we said last week, I said if we will see the breakout of this confluence area and the general market will confirm the out of this consolidation, we will start watching for our next upside targets. And currently on the daily chart, I would consider this setup. So around 1746 we have resistance, and potentially it might be kind of the head and shoulders. So for instance, it might be the shoulder, head. Here market could show some deep retracement. What the reasons might be for this deep retracement, difficult to say. Not necessarily it should be as deep as this one. Probably it might be smaller, back to the 1660 area. It will be quite enough, but that's potential scenario that we could keep an eye on. If nothing will happen here, this market just break it up. In this case, probably it will fall to the 118 area, and I will show why it could happen, mostly because we have next target that stands around 118. So shortly what we have here on the daily. On the lower time frame, here's we have some extensions. You could see reaction on the OP has been over. It's just showing the retracement. This is perfect performance for any bullish pattern, just retesting of the neckline, minor pullback. It's very choppy and gradual, as we said, and pointing that this is definitely not the reversal. This is kind of the retracement type of action, and we have the upward performance. So intermediate target, some local target stands with this 127 extension of this this action, and kind of the butterfly. So you could recognize it by yourself. It stands 1722, very close to the 1743, which is actually the resistance that we have on the daily chart. 1746, sorry. So 1746, in fact, this is the fib level, but this stop also stands around 1726. So that might be some flirting with the stops, if any have been placed above this area. So once they will be triggered, this market could get the momentum just to fly another 20 pips to the upside, just powered by the stop triggering. So anyway, an area somewhere between 1725, 1745. This is an area where we will be watching for signs of the possible starting of the pullback. If we will not get any, in this case, we will be watching for this next target. So it's 1718, 1797, 118 approximately. So this is next ABCD XOP extension. If even you will use, this is also 1618 extension of this one, but if you will try to apply this one, you also will see that 127 perfectly agrees with the same XOP target. So it's not necessary to consider a lot of different extensions because all of them mostly stands around 118 area. That's shortly the plan. Now how we could try to deal with it. On the hourly chart, here we have a couple of the possible trading setups. Mostly we could say that probably they're including each other. So since the rally has started, we have the breakout. Dealing with the short-term scenario is very simple because it's obvious that scenario in general, this context will be valid until market stands above these lows. So we do not want to see that market will erase all this rally, drop right back down, drop below the neckline, right, and forming some bearish reversal swing, something like this. This definitely will be the catastrophe. So we do not want to see it. So it means that for the bullish purposes, all that we need is just watching for a retracement here and controlling the price performance around the major support areas. Currently, I like this area around 116.70. It's confluence support, and it might be kind of the momentum trade. So here we have more or less significant thrusting action. It's a kind of the bread and butter, but not quite the bread and butter, because it will be a bit longer term for downside retracement. Let's call it just a momentum trade. So good thrust, retracement down to the 30% support, and this might be the background for a possible taking long position. So for considering next long, I would keep an eye on this area around 1670, 1675 maybe. There's a confluence. Here the shape might be kind of the Gartlist triple two. It's some kind of the maybe ABC reaction to the downside, something like this might happen. So that's actually all that we have currently on euro currency. So let's just keep watching, and hopefully we'll get this pullback and will let us to get a position with the actions somewhere to the 117.45, which also might be not really bad scenario at the end of the week. And then we will see what will happen next.